Hey there, and welcome to This Explainer. Today we're putting on our tax policy consultant hats because we're going to look really closely at the invisible mechanics of taxation. Now, we all know governments need massive funds, right? They've got to maintain law and order, build infrastructure, defend the country, the whole shebang. And to get those funds, they levy taxes. But beneath the surface, there's actually a fascinating kind of hidden dynamic that dictates who literally loses their money. Because as you'll see, it's not always as straightforward as it seems on the surface. So let's just dive right in.
So, who truly bears the burden of a tax? Now, you might initially think, well, whoever writes the check to the government bears the burden, obviously. But physically handing money to the government, that is rarely the whole story. According to the principles of public finance, a tax is a compulsory contribution, meaning there's no direct give and take between the taxpayer and the government. And because it's a mandatory financial hit, well, people naturally try to adjust. There's actually a hidden game of hot potato happening right under our noses in the economy. To really understand how this works, we need to split the whole idea of paying a tax into two completely separate concepts.
All right, so our first core concept is impact. The impact of a tax just refers to the person who pays it to the government in the first instance. You could think of this as the initial, physical act of paying. It's the person whose name is literally on the tax form, the one who initiates that bank transfer to the public authorities. They're the ones dealing with the initial compliance. But here's the kicker. The first person to touch the tax isn't always the last person to actually feel its financial weight.
And that brings us to our second and honestly, arguably, way more important concept, incidence. While impact is that first step, incidence is the real money burden on the person who ultimately pays it. This represents the true, final financial loss out of someone's pocket. The money is just gone, and they have absolutely no one else in the economic chain to pass the bill to. So if you think about the impact as the initial hit, the incidence is the final bruise.
Okay, so what does this all mean? The absolutely crucial point here is figuring out when the impact and the incidence fall on the exact same person, and when they are actually split apart. To do that, we're going to test our two concepts inside two entirely different tax environments, direct taxes and indirect taxes. These two systems handle the transmission of the tax burden in completely opposite ways. One is super rigid and the other is highly flexible.
Let's kick things off with direct taxes. I like to refer to this environment as the locked burden. A direct tax is generally levied on the income and property of a person. And in this specific realm, the transmission of the tax burden is completely locked in place, like there's absolutely zero mobility. The person the government points their finger at is the exact person who takes the full, unmitigated financial hit. The core rule here is incredibly strict. To quote the source material directly, the impact and the incidence of tax is on the same person, and the burden of tax cannot be shifted or transferred. Basically, in a direct tax system, passing the buck is just flat out impossible. The initial payer and the ultimate loser are one and the same. You take the impact, you bear the incidence. There is absolutely no escaping the money burden by pushing it onto someone else's plate.
Let's anchor this theory with a prime example that we are all probably way too familiar with: income tax. According to fiscal policy definitions, income tax is the classic direct tax. It's a tax levied directly on your income. And because the impact and incidence are locked, the person it is levied on must bear both. Other examples include things like corporation tax, property tax, and wealth tax. Look, if you own the property or you earn the income, you can't exactly ask your neighbor or your customers to explicitly pay that specific tax bill for you. The burden stops exactly where it starts.
But now, let's pivot to something entirely different: indirect taxes. In this environment, the rules of the game change completely. Indirect taxes are levied not on income or property, but on expenditure incurred. Because it's based on transactions and spending, the burden is no longer locked. It is suddenly split apart and highly mobile. This is what we call the shifted burden.
So, an indirect tax operates entirely differently. It is initially imposed on and paid by one individual, but the burden is passed over to some other individual who ultimately bears it. Think of it like this. The government imposes a tax, that's the impact, on person A, let's say producers and sellers. Person A physically writes the check to the government, but then person A successfully shifts that exact financial loss, the incidence, right over to person B, the consumers.
Let's walk through the Goods and Services Tax, or GST, just to see this shifting transmission in action. First, GST is levied at all points in the supply chain. The businesses, the producers, the sellers, they all take the initial impact. They are the ones actually remitting the tax to the government at each stage of production. But do they keep that money burden? Nope, no way. They pass it along by simply building it right into the price of the goods.
Ultimately, the final consumer will bear the GST paid by the last dealer in the supply chain. The business took the impact, sure, but you, the final consumer, you took the true incidence.
All right, to put a bow on these mechanics. Under a direct tax, impact and incidence land on the exact same person, and the burden cannot be shifted. But under an indirect tax, impact and incidence fall on different people because that financial burden can be passed over. It is a complete shift in who actually funds the public purse.
So I want to leave you with this final kind of provocative thought to wrap up our explainer. If a brand new tax is introduced tomorrow in your economy, what is the very first question you should ask? You really shouldn't just ask who has to file the paperwork. You must ask, will you bear the impact or will you bear the incidence? As we've seen today, being the one who pays the government in the first instance doesn't always mean you're the one who ultimately loses the money. Always look past the surface of fiscal policies to figure out where the true money burden ultimately lands. Thank you so much for joining me, and I hope this helps you see the invisible mechanics of taxation in a whole new light.